Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Huitongda Network Co. Limited annual report. Huitongda Network Co. Limited offers a wide range of digital technologies and supply chain capabilities to businesses in China. The company operates through three main segments: commerce business, service business, and others. The commerce business segment provides direct sales and marketplace services that enable merchants to sell their products online through the company's platform. This allows users to purchase products directly from merchants, streamlining the shopping experience. In addition to commerce services, Huitongda Network also offers intelligent business and marketing SaaS plus subscription service. This service enables businesses to manage and optimize their operations more efficiently using digital tools. The company also provides a collection of merchant solutions, including various other related services that support the growth and development of its merchants. These services are designed to help businesses succeed in the online marketplace. Overall, Huitongda Network Co. Limited is a comprehensive provider of digital technologies and supply chain capabilities that cater to the needs of Chinese businesses. Huitongda Network Co. Limited market capitalization of 4 billion is materially smaller than most of its industry peers of roughly 8 billion. Huitongda Network Co. Limited trades at a lower price-to-earnings ratio of 14 times and a lower price-to-book ratio of 0.48 times relative within the industry. This suggests a potential market detachment, as Huitongda Network Co. Limited trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The leverage on the balance sheet appears elevated, with liabilities of 66% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. Revenue growth is primarily driven by several key factors. Firstly, operating revenue has seen a significant year-on-year increase of 14.6%. Additionally, the company's deepening development of intelligent supply chains and launch of major projects have contributed to its growth. The expansion into new categories, strong collaboration with leading brand manufacturers, growth of own brands, and AI product development and application have also played a crucial role in driving revenue growth. Furthermore, the full-stack comprehensive AI cooperation with Alibaba Cloud has led to rapid promotion of full AI transformation of digital intelligent products and gradual upgrade to comprehensive payment model. The company's rapid expansion through self-operation, joint ventures, and mergers and acquisitions, as well as its centralized procurement platform for high-quality upstream resources, have also contributed to revenue growth. On the other hand, revenue decline is primarily driven by a decrease in certain merchandise categories such as vehicles and auto parts, liquor and beverages, agricultural means of production, and home building and renovation materials. The overall decline in commerce business revenue has also been significant at 13.1%. Additionally, government grants have seen a decline of 24.1%, and others have seen an even more substantial decrease of 85.8%. In conclusion, the primary drivers of revenue growth or decline are largely influenced by the company's strategic initiatives, market trends, and external factors such as government grants. The company's financial performance has shown significant improvement in both net income and profit margins over the past year. Net income increased by a substantial 14.6% from RMB 461.8 million in 2024 to RMB 529.4 million in 2025, indicating a notable growth in revenue. Furthermore, during Apple's new product launch season, net income saw an even more impressive increase of over 30%. In terms of profit margins, the company has achieved remarkable growth. The gross profit margin rose by 18% year-on-year, from 3.8% to 4.5%, marking a significant improvement in profitability. This increase is particularly notable for own brands, which saw their gross profit margin exceed 40%. Additionally, during Apple's new product launch season, the gross profit margin increased by over 30%. The net profit margin has also reached a record high, although the exact percentage change is not specified. Overall, these results demonstrate the company's ability to adapt and thrive in a competitive market, driven by strong revenue growth and improved profitability. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided data, the net cash inflow for 2025 was RMB 419 million, demonstrating a significant increase from the previous year. Furthermore, the operating cash flow figures for both 2025 and 2024 show a substantial growth, with 2025 recording RMB 1,234,119 and 2024 at RMB 12,456. Additionally, the net cash generated from operating activities was positive in both years, with 2025 at RMB 418,971 and 2024 at RMB 275,278. These figures collectively indicate that the company is generating a substantial amount of positive operating cash flow, suggesting a strong financial position. The company's debt level has undergone significant changes. On one hand, trade and bills payables have increased by a substantial 13.4% and 13%, respectively. This indicates that the company is taking on more short-term liabilities. However, bank loans and other borrowings have decreased in current liabilities by 73%. On the other hand, pledged deposits have surged by 111%, while time deposits have declined by 57%. The increase in pledged deposits could be a sign of the company's efforts to manage its debt levels. Meanwhile, the decrease in time deposits may indicate that the company is opting for more liquid and accessible funds. The changes in debt levels are likely to impact interest expenses. However, there is no direct information provided on this aspect. Nevertheless, it can be inferred that the company's debt structure has undergone significant transformations, which may have implications for its future financial performance. The financial performance of the company's businesses varied significantly between 2024 and 2025. The commerce business was a standout performer, with revenue increasing by a notable amount. This growth was accompanied by an increase in profit, indicating a successful year for this segment. In contrast, the service business struggled, experiencing a decline in both revenue and profit. Despite efforts to improve performance, this segment failed to meet expectations, resulting in decreased earnings. The disparity between these two businesses highlights the need for targeted strategies to address the challenges faced by the service sector. Management is outlining a comprehensive strategy for the company's future outlook. The key initiatives include deepening cooperation with Alibaba Cloud to enhance ecological AI capabilities, upgrading payment models for digital intelligent products, and entering hard discount FMCG chains with the launch of the ZZip brand. A two-wheel drive approach will be maintained through industrial construction and capital investments, while strategic mergers and acquisitions will shape a new industrial layout. The focus is on building an innovative supply chain platform centered on FMCG, with a goal to accelerate the shift from high-quality operations to value creation by 2026. The company aims to leverage AI to reshape operational efficiency and create industrial value, while strengthening capital-driven growth through dual-line expansion in industry and capital. This multifaceted approach is expected to drive future success and growth for the organization. The company's financial activities have been transparent in their annual reports. One notable aspect is the absence of dividend payments to shareholders. According to page 39, no dividends were paid out by the company. On the other hand, the company has actively engaged in share buybacks. Specifically, they repurchased a significant number of shares, totaling 14,222,862, as mentioned on page 37. Additionally, the company also repurchased treasury shares, with a total of 1,345,700 shares being bought back, as stated on page 39. That concludes the financial summary for Huitongda Network Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.